Welcome everybody. I'm Michele Herbert, Client Partnership Executive for Guild Super. And can I firstly say congratulations to all of you on being nominated for the 2020 Pharmacy Assistant of the Year Awards. It's a huge achievement at any time to be nominated for the PADI Award, but I think after the challenges we've all faced this year, it certainly makes your nominations all that more special. And while many Australians have been staying at home, you and your colleagues have been working on the front line, protecting the health and well-being of the communities that depend on you. Thank you for risking your health to ensure the safety of ours. Guild Super has been sponsoring the PADI Award for many years now, and normally we would have a representative there with you, but unfortunately we are unable to get together this year. But while we can't be face-to-face, we certainly can provide you with the education we have in the past. Each year, finalists are provided superannuation information so that they can make informed decisions, and hopefully that will give them a better financial outcome. So today I'm going to provide you with a webinar, and my details will be at the end, so please feel free to contact me directly if you have any questions or queries regarding your superannuation. So let's get started. Just going to share my screen with you. Now before I do need to let you know that the information today in this presentation is of a general nature only. It doesn't take into account your personal circumstances. You should seek independent advice before making any decisions. Today, I'm going to give you an overview of Guild Super, explain how superannuation works and why it is so important. I will also cover ways to make the most out of your superannuation, and also how Guild Super has introduced an innovative program that can assist you to grow your super balance. So for those of you who aren't aware, Guild Super was set up actually by the Pharmacy Guild of Australia, and it is set up specifically to look after the retirement savings of those working within the pharmacy sector. We have tailored our superannuation products and services to meet the special needs of those working within pharmacy. We have over 80% female membership, which is one of the highest of all super funds in Australia, and we're very much aware that women face greater challenges when trying to grow their super balance. Women generally live longer than men and take more time out of the workforce due to family commitments, so this makes us look at new ways to help our members grow their super balance. And as you can see, Guild Super is a Chant West 5 Apple Gold rated fund, which is the highest rating you can receive. We've also won numerous other awards, including Best Innovation Award at the 2019 World Pension Summit for Super, the industry's first shop and save member rewards program. And I'm going to tell you about that a little bit more later. So what is superannuation? Well, the easiest way to think of superannuation, that is a long-term savings account designed to provide you with income in your retirement. There are strict rules around your ability to access your super savings because it is designed to provide you with income in your retirement. At the moment, your employer pays 9.5% of your salary into your super account, and this figure is due to rise to 12% in the next few years. The great thing about superannuation is that it's a tax-effective way to save for your retirement. Contributions or returns are taxed at a special rate, which is generally lower than what you would pay on money that you earn or invest outside of super. You do need to earn more than $450 in a calendar month to earn super guarantee contributions from your employer though. What that means is that if you've got, say, a casual job and you only work 1 or 2 shifts, if you actually earn less than that $450 in total in that calendar month from that employer, then they don't need to pay that 9.5% super guarantee for you. Once you reach 60 years of age, money paid out of a taxed super fund is tax-free. Due to the tax-free nature of super, the government introduced limits on how much people can contribute. There are different limits depending on the type of contributions you make. How does it work? Well, the easiest way to think of super is that money goes in during your working life from various sources, then there's deductions for certain things, and this leaves you with your net balance. So money in, well, that includes the 9.5%, as I mentioned before, the super guarantee from your employer. If you're self-employed, you can also make your own contributions to super. To boost your balance, you can also have the option of making additional contributions to your super, and I'll explain the different types of contributions in the coming slides. Also, for many of you, you might have more than one fund, so rolling other funds over could save you in fees. And lastly, the government may also contribute to your super if you qualify. Now, also added to your super are any investment earnings, or what we call positive returns. Your super fund invests your money for you, and that's going to provide you with a return over the long term. Now, over the long term, this should be a positive addition to your super balance, but from time to time, there is an expectation that in some years there may be a negative return, and that will appear as a deduction to your super. Deductions also coming out of your super might include fees related to managing the money and the administration of your super fund. It can also include any government taxes, as well as insurance premiums if you've got insurance cover through your super. Now, these additions and deductions all contribute to your final account balance. So why do you need superannuation? Well, it's designed to provide you with financial independence when you retire. At present, the age pension is around $24,500 per annum, which I'm sure many of you would agree is not a lot to live on. Retirement presents this great opportunity for you to do the things you've always wanted to do. And super gives you that financial freedom to travel, socialise and enjoy life without having a total reliance on the government age pension. Now, one of the most frequent questions financial planners get asked is, how much do I need in retirement? And no doubt you've all heard people saying, oh, you need at least $1 million in superannuation before you can afford to retire. Well, look, don't pay any attention to them because you don't need $1 million. The amount of super you will need will depend on your own personal circumstances. But as a general rule, ASFA, which is the Association of Super Funds, has developed what we call a retirement standard, which helps to solve this problem for many people. The report looks at what the average Australian would need to fund a comfortable lifestyle in retirement, and it has a benchmark for a comfortable lifestyle as well as a modest lifestyle. And it factors in those living as couples and also those living as singles in retirement. And it also takes into account your life expectancy, so how long you're expected to live once you retire. Now, a modest lifestyle is considered just better than the age pension, but it still only allows for the basics. A comfortable lifestyle enables an older, healthy retiree to be involved in a broad range of leisure activities and provides for a good standard of living in retirement. They forecast for a single person, they should aim for a super balance of $545,000, which will give them a comfortable lifestyle in retirement. And for a couple, they should aim for a balance of $640,000 together. At present, there are 53% of couples that are on track for a comfortable lifestyle in retirement, but only 22% of singles are. So by taking a few small steps now, you can make a huge difference to your financial outcome when you retire. So another question we get asked all the time is, when can I access my super? As mentioned, super is a long-term and tax-effective investment designed to support you in retirement, so the government does restrict when you can access this. As a general rule, it depends on when you were born, and this is called your preservation age. For those born after the 1st of July 1964, your preservation age, when you can access your super, is 60. If you were born before this date, then your preservation age will be earlier. Once you reach your preservation age and retire, you can access your super. Now, there's other ways you may be able to access it earlier. The government's introduced an early access scheme due to COVID-19, and I'm going to discuss that a little more later in detail for you. There are other ways you can access your super if your balance is less than $200, if you're in severe financial hardship or on compassionate grounds, if you pass away or you're permanently incapacitated, or if you're suffering with a terminal medical condition. Now, another way to access your super before retirement is also what's called the First Home Super Saver Scheme. This scheme helps Australians boost their savings for a first home by allowing them to build a deposit inside superannuation. The First Home Super Saver Scheme applies to voluntary superannuation contributions made from the 1st of July 2017. It doesn't include the super guarantee that your employer pays. It's only voluntary contributions you've made. These contributions, along with their earnings, can be withdrawn for a home deposit. Now, for most people, the scheme could boost the savings they can put towards a home by at least 30% compared with saving a standard deposit outside of superannuation. Now, another way to access your super is if you face severe financial hardship. And this is outside the normal current COVID-19 financial hardship early access scheme that the government introduced recently. Now, you may be permitted to access up to $10,000 of your super benefit on the grounds of severe financial hardship, and you need to be unable to pay for essential family living costs and be getting a income support payment from the government and have been on that for at least 26 weeks. You can only make one early withdrawal due to severe financial hardship in any 12-month period, and if granted access, you will be able to withdraw between $1,000 and $10,000, and that money will be subject to tax. Now, I'm just going to cover off on COVID-19 and this early release scheme. So if you were affected by COVID-19 pandemic, you may be eligible to access up to $10,000 of your super until the 31st of December 2020. You can apply to access your super if you meet one or more of the following requirements. You need to be unemployed. If you're eligible to receive a job seeker payment, youth allowance for job seekers, parenting payment, special benefit or farm household allowance on or after the 1st of January 2020. Also, if you were made redundant, your work hours have been reduced by 20% or more, or if you're a sole trader and your business was suspended and therefore your turnover was reduced by 20% or more. Now, if you meet any of those requirements and decide to withdraw your super, you won't pay any tax on the super taken during COVID-19. Normal financial hardship payments, as I said before, are subject to tax. Now, people who are eligible will be able to apply online through MyGov, and they can access up to $10,000 until the end of December. Now, we have been saying to members, if you are struggling financially, then yes, of course, access your super. However, please look at all the government initiatives and assistance that they're offering and use accessing your super as a last resort. Now, please also be mindful that withdrawals can impact your insurance cover if you've got insurance cover through super. More than 70% of Australians that have life insurance hold it within their super fund. So if your super balance falls below the minimum that has to be held for insurance cover, or if it falls to zero, that could affect your life insurance. So making contributions to your super. Now, for those of you who have accessed your money due to COVID-19 or are looking at accessing your superannuation, look, we would certainly recommend that you try and get those extra payments back into your super when you can, just to make up for the money that you've taken out early. If you can afford it, making extra contributions is a great way to boost your retirement savings, and it can reduce the tax you pay. If you're on a lower income, you might also be eligible for extra contributions from the government. Now, there's different types of contributions that go into your super account. As mentioned before, your employer is obliged to pay 9.5% of your salary into your super account. You can ask your employer to pay part of your pre-tax pay also into your super account, and this is known as salary sacrifice. These payments are called concessional contributions. That is, they get concessional tax treatment, and they're taxed at 15%. So for most people, this will be lower than their marginal tax rate. You benefit because you pay less tax while you're also boosting your retirement savings. Now, generally making extra concessional contributions is tax effective if you're earning more, as a general rule of over $37,000 a year. Now, there is a limit to how much extra you can put in. The combined total of your employer and salary sacrifice contributions must not be more than $25,000 each financial year. Now, you can also make voluntary contributions to your super from your after-tax pay. These payments are called non-concessional contributions because you've already paid tax on the money, so it goes in and it goes out and it's tax-free. You can make up to $100,000 each year in a non-concessional contribution, and if you're earning less than around about $52,000 a year and make it an after-tax contribution, you may also be eligible for the matching government contribution, co-contribution. You don't even need to apply for it. You just make your after-tax contribution to super, and the government will work out how much you're entitled to when you lodge your tax return. If you're eligible, the government pays that money straight back to your superannuation fund. Now, as mentioned before, you can look to consolidate your other super funds into one. Now, for those of you that are members of Guild Super, you can also add to your super by using Super Super, which is our award-winning shopping reward program. Now, this has been designed to boost the balance of our members every time they shop, and I will explain this more in the coming slides. Self-employed people can also make tax-deductible contributions to their super, and there's also another option to boost your super called spouse contributions. Now, if you make contributions to a complying super fund on behalf of your spouse who is earning a lower income or not working, you may be able to claim a tax offset. So as you can see, there's plenty of ways to add a little bit extra to your super, which can make a big difference to your retirement outcome. So what can I do with my super? What choices have I got? Well, your super fund invests your money for you, and over the long term it grows your super balance. Most super funds let you choose from a range of investment options, so it's worth taking the time to check your options and decide what's right for you. The options you choose can make a big difference to how your super grows. You can find out about your fund's investment options by checking its website or product disclosure statement. Within super funds, there is also what's called a default investment option, and this is where your money is invested if you don't make a choice about what investment option you want to be in. When members join Guild Super, they are automatically invested in the My Super product unless they make an investment selection. The My Super product is made up of 3 life stage investment options. The members' super contributions are automatically invested in the life stage option that suits their age, and as our members get older, the investments are automatically adjusted to reduce the level of investment risk heading towards retirement. Now, Guild Super also offers MyMix investment solutions, which offer a choice of 8 different investment options to those who prefer to make their own choice. To invest well, you need to find investment options that fit your financial goals, your investment time frame, and your risk tolerance. So things to consider are: how old are you? How comfortable are you with investment risk? And how long is it before you need to access your super funds? If you're not sure, most super funds offer advice which will allow you to get personal advice about which investment option is best for you. Guild Super certainly does offer this at no extra cost. Now, another benefit of super is that many funds provide personal insurance cover. Now, as I said before, more than 70% of Australians that have life insurance have it within their super fund. Now, super funds typically offer 3 types of life insurance: death cover, and now that pays a lump sum or income stream to your beneficiaries when you die or if you have a terminal illness; total and permanent disablement, or TPD, and now that pays a benefit if you become seriously disabled and it's unlikely that you're able to work again; and income protection insurance, which can also be called salary continuance cover. Now, this pays you a regular income for a specified period. That can be 2 years, 5 years, or up to a certain age if you can't work due to temporary disability or illness. Now, most super funds will automatically provide you with life cover and TPD insurance. Some will automatically provide you income protection insurance. This insurance is for a specified amount and is generally available without medical checks. It's certainly worth checking to see whether or not you've got insurance cover through your super. Now, recent changes to legislation has meant that those under 25 or those with a balance of less than $6,000 in their super need to opt in if they want insurance cover through their superannuation. So have a look at your own circumstances and see what's best for you. There's certainly some advantages to getting insurance through your super. You can get cheaper premiums. They tend to be cheaper than if you buy group life policies outside of super. Premiums are usually cheaper because they're group life rates within super. If you buy a policy outside of super, it tends to be a standalone policy which can cost you more. They're easy to pay. The insurance premiums come out of your super balance. There tends to be fewer health checks. So most super funds accept you as a default level of cover without any health evidence. However, there are some downsides. So policies can end before you retire. So some end at 65, some end at 70. Outside of super, if you get a cover, they may last longer than that. You may also have limited cover, so it may be lower than what you can get outside of super, or the premiums can reduce your super balance. So you do pay for the insurance cover that you've got, and the premiums come out of your super balance. So it's a sort of a fine line as to how much insurance you need and how much you're paying for that. So it's certainly worth reviewing that insurance cover you've got and get advice. So small steps now can have a big impact impact on your financial future at retirement. It's your money, so it's worth taking the time to know what you have within your super fund and how it's working for you. These simple steps can help you take control of your super and help change your financial future for the better. So choose a super fund that suits you. Consider a super fund that's trusted by others and has a history of delivering quality super returns and services to their members. Also look to a fund that understands you and is a good fit for your circumstances. Look at bringing all your super funds into one. If you can have more than one super fund, which a lot of people do, you're probably paying more than one set of fees. And if you've got insurance through them all, you'll be paying premiums on both of those as well. So combining your super may save you money. Log in and check your contributions too. Most super funds offer online member access, so please check to make sure you're getting paid the contributions you should be. Guild Super does contact our members on a regular basis, and we let them know what's been paid in by their employer, and that helps our members keep track of what's going into their superannuation. Also, check your insurance cover. As I mentioned before, insurance through super can be a cost-effective way to protecting you and your family from life's ups and downs, but it can also be one of your biggest costs. So it's worth checking all the details and making sure you've got the cover that's right for your lifestyle and you're not paying more than you need to. Also learn about the type of investments within your super fund. Every super fund is different. Take the time to look at the various investment options and the risks associated with them and see what you're comfortable with. And also think about adding a little bit extra. As I mentioned before, it is never too early to start adding a little extra. It can make a big difference to your retirement outcome. So as I mentioned before, Guild Super is here for you. We were established by the PGA specifically to grow the retirement savings for those within the pharmacy sector. We've got a history of solid long-term investment returns, and we offer life stage investments which change with our members. We've got very competitive insurance cover offerings, and the thing many members love about us is that we provide personalised service. Our staff are always on the road, ready to come out to work sites and assist members with their superannuation queries. We also offer phone advice, which is personal and at no extra cost, and that can assist members make decisions around investments, insurance and contribution strategies. But that's not all. We truly are different than most super funds. So what makes Guild Super so innovative and different? Well, we listened to our members when they told us they were aware that they would not have enough to retire on, and it really frightened them. As I said before, we have one of the highest female memberships of all super funds. Women tend to live longer than men and take more time out of the workforce due to caring responsibilities, and this can have a huge impact on their ability to save for their retirement. We heard our members say they wanted to add to their super, but they just couldn't afford to do so, as all their money went on day-to-day expenses. Now, we've heard all the give up your coffee a day and add this money to your super and you'll get a better outcome. But some of our members can't even afford to buy that cup of coffee, which meant we had to create a different way to get extra money into their super without them having to go without. So we created a way for them to use those day-to-day expenses to add to their super, and it's called Super Super. So what is this program? Well, it's the first super program to help Australian families to save more to their super every day without increasing their cost of living. Super Super is a shop and save rewards program that is available exclusively to members of Guild Super. We've teamed up with hundreds of retailers to offer cash rewards that are added to your super account and count towards your after-tax contributions. You may be eligible to get the government's co-contribution too, depending on how much you are earning. Or if you're earning above the threshold to receive the government co-contribution, you may be able to claim a tax deduction for the amount contributed. Then again, you might be a first home saver and looking to grow your home balance sooner by using Super Super. There are many benefits depending on your circumstances. So how does it work? Well, the super contribution you receive from your shopping is calculated based on a percentage of every dollar you spend with a participating Super Super retailer. You can shop your favourite brands directly online or pre-purchase vouchers and shop in store or online and add to your super at the same time. Super has been designed to promote saving to super from the things you are already spending money on, such as groceries and petrol. We're not encouraging you to spend any more. There's no cost for fund members to use the program, and their shopping doesn't cost them anymore. There are hundreds of participating retailers, as I said, Coles, Woolies, Fuel Outlets, Kmart, Big W, JB Hi-Fi, just to name a few. All are well-known brands many of you would use on a regular basis. As an example, Woolworths puts 5% of what you spend on groceries there as a contribution to your super. So that works out to be $5 for every $100 you spend. If an average family spends $200 a week on groceries, you can potentially get an extra $10 a week or $520 a year into your super just by using Super for that grocery shop. The great thing is your groceries haven't cost you anymore, but you've got extra money into your superannuation. By completing your everyday shopping with Super, you'll be continually adding to your super account, and a little extra over time can go a long way. Small, regular amounts added to your super can add up to thousands of extra dollars, thanks to the magic of compounding interest. This slide shows Claire, our average member. As I mentioned before, over 80% of our members are women. Many of them, like Claire, are worried they're not going to have enough money to retire on, and we needed to come up with a... Many work part-time and are offering lower income roles, and it has an impact on their savings for retirement. As you can see from our average member, Claire, she's 34. She earns $34,000 a year, and she has a current super balance of $18,000. If she doesn't do anything different and continues along as she always has, she will end up with $141,000 in her super at retirement, which I think is well short of the $545,000 ASFA suggests you should aim for a comfortable lifestyle in retirement. However, if she decided to register for Super and started to use our shopping rewards program, here are some projected figures which will greatly add to her super balance. By using Super for 25% of her general expenses, Claire could add over $33,000 to her super by retirement. By using it for 50% of her expenses, she could add just over $61,000 to her super. And by using it for all her general expenses, she could potentially add as much as 75% to her retirement balance. That's over $105,000 extra into her super. Now, they're certainly not small numbers, and don't forget she's not paying this into her account. The retailers are topping it up for her. It certainly is innovative, and as I mentioned earlier, we've won several awards for the program, and this is just one of the ways that we're working towards giving pharmacy employees a better financial future. I've also added several resources links here which you might find useful. MoneySmart is a government website, and it's run by ASIC, and it's got some fantastic financial information and tools for you to use. My details are also going to be on the last slide, so if you've got any questions or comments, please feel free to contact me anytime. We have offices all over Australia and staff waiting to assist you, so please get in touch with me if you do need any assistance. So just to finish up, thank you so much for being here today, and I congratulate all of you again on being nominated for the Pharmacy Assistant of the Year Award. You're all doing an amazing job, and on behalf of Guild Super, we thank you for everything that you do and continue to do for your communities. Thank you.